The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
The battle between the SEC and the crypto industry is well known, but amid all this drama, there are some quieter success stories like Prometheum Capital and others who are actually getting approval to deal in crypto securities. Joining us now is Prometheum Inc. founder and co-CEO Aaron Kaplan. Welcome, Aaron.
Good morning.
Good morning. Okay, so yeah, I think your story is quite different from what we hear about a lot on this show. My understanding is that Prometheum Capital has recently been approved as a special purpose broker-dealer and an alternative trading system for digital asset security. So I guess the question here is like, how hard is this? Because, the general feeling or the general, understanding in the crypto industry is that like nobody's really getting anywhere with the SEC, and yet you have, right? So, was this sort of uphill battle and this difficult situation that everybody described it to be, or was it relatively smooth?
It was a long process, but I don't think it was difficult. I think that overall there is a compliant means by which to trade and custody digital assets under the securities laws in the United States, and companies that want to be compliant have to follow those laws.
Okay. Well, I guess the other question would be that, so now that you have those approvals, what exactly do you plan to do with them?
Well, this Prometheum Capital is approved to custody digital assets for both institutional and retail. And in the near future, we also anticipate being able to clear and settle the transactions that occur on Prometheum ATS. And once that happens, we feel that a lot of the current trading and custody activity that is arguably occurring in pseudo-legal fashions will migrate to compliant ecosystems that are compliant under the federal securities laws.
So with that said, it's often been argued from a lot of people in the industry that they go in, they talk to the SEC, everything seems okay, and then they get a Wells notice. Things like that. What gives you the idea that you can trust the SEC, to be honest? I mean, you might have gotten an approval now, but what sort of safeguards are you putting in place just in case, I don't know, maybe a commissioner wakes up or a chairman wakes up and says, this is security. These are securities. This isn't good. Anybody who's a custodian of it, is doing something they shouldn't do. What kind of, what's to stop that from happening?
I would argue that those entities often have skeletons in their closets and that their previous actions weren't necessarily in line with the federal securities laws. We have waited to get the proper approvals before moving forward with our business, and we believe that we have a clean slate, so to speak, compared to anyone else. So we're sort of the legacy crypto providers, and we've been working closely with the regulators to make sure that we will achieve compliance.
What digital assets are you working with? How are you determining what is or what isn't a security?
At the moment, we haven't announced our assets, but I would say that Chairman Gensler has said that the overwhelming majority of digital assets are securities, arguably everything except for Bitcoin, and we take the same opinion on that.
So no XRP?
I would argue that XRP is more likely a security than a non-security.
Right. So now you're so kind of walk us through a little bit through this process that you went through. I mean, maybe not all the detail, but what did you guys do that was different than some of the other players, the ones that you say have skeletons in their closets?
We complied with the federal securities laws and the pathways and regulations laid out. I think that what we've seen in the industry is the argument that there's no path to compliant, but there has been. There's the 3-step and the releases which explain how to trade digital assets compliantly under the securities laws, under the 3-step and 4-step. And then there's releases that explain how to custody digital assets compliantly under the securities laws with the special purpose broker-dealer release. And I think there's been an intransigence in the industry when it comes to wanting to comply with the federal securities laws for 2 reasons. One, those entities don't have the proper licenses, and 2, their technology isn't built with how sort of securities have to be traded, handled, processed, custodied, etc. So they basically have a difficulty in achieving compliance, and that's why there's arguing there's no route towards compliance. And furthermore, the only people who are best served by the idea of new legislation or new regulation are the business entities, not the investors who need to be protected. And the best way to protect them is under the federal securities laws.
So I half joking, I said XRP is not counted, but in all seriousness, I mean, are you just going solely by what Chair Gensler said, or is there an analysis involved in determining what would constitute a security? In other words, are you on your end saying, you know what, this smells like security, it's too much? I mean, this Ether, for instance, which is staked and which people are saying Ether might be a security, it's up in the air. Would that count as a security in your analysis, in the way you look at it?
Well, in regards to ETH, I would say you should go back to the initial issuance in the ICO. I would argue it was an investment contract then. It's always been an investment contract, and therefore it's most likely a security. In regards to the way we analyze and determine whether an asset is a security, that's an internal compliance and operational determination based on significant legal, operational, and a plethora of factors, and is made at the different brokerage level, whether at the ProCap level, Prometheum Capital, at the special purpose broker-dealer, or at the Prometheum ATS level.
So is it safe to say you're optimistic about the crypto industry in the US? We've heard so many CEOs in this industry come out and say they're looking at setting up shop elsewhere. They're looking at going to maybe Europe, where regulation is a little bit more clear. What's your outlook on regulation in the US, especially as it pertains to companies dealing with crypto?
The approval of Prometheum Capital as a special purpose broker-dealer really shows that there is a way forward for crypto in the United States. There is a pathway towards compliance, and I think this is the beginnings of a process where all of the trading and custody activity that's currently occurring and arguably improperly regulated venues will migrate to securities compliant ecosystems. As Chairman Gensler has stated multiple times, the overwhelming majority of digital assets are securities and need to be traded as such. And furthermore, that time is running out for virtual currency exchanges to register under the securities laws. Previously, what you could have argued, well, there are regulations, but no one's been approved, so maybe there is no path. But now that Prometheum Capital has been approved, that argument is moot. And
in terms of how do you see this growing? Essentially, obviously you're hoping that the crypto industry, crypto trading in the United States, and crypto custody grows. Where do you see it growing, though? Do you see it growing on the institutional level? Do you see it growing on the retail level, given all these regulatory hurdles that seem to be popping up on what people can trade?
Well, I think on the institutional level, having a compliant ecosystem under the federal securities laws will eliminate a lot of sort of the compliance and regulatory risk, which has prevented sort of mass institutional adoption. What we saw after FTX was that there was a pullback from institutions that were participating in the space, and also a sort of inherent fear from institutions that were considering getting into the space. And now that there's a compliant ecosystem with Prometheum Capital and Prometheum ATS, I think sort of that allies any of those concerns. Now, on the retail side, I think after FTX, there was a need to reestablish confidence to let customers know that they will gain or lose, they will make a profit or loss based on their own decisions, their own investment decisions, and not because the institution they're keeping their funds at or they're trading at goes belly up and they become a general creditor. When you're protected under the federal securities laws, you have the investor protections, the fair and orderly markets, the proper regulations as to how you have to segregate and custody digital assets and keep it segregated from that of the institution, so there's no commingling. And it just makes sense for retail investors to want to migrate to a system that allows them to actually be properly protected.
Are you going to be listing any tokens that are already listed on other trading platforms like Gemini, Kraken, Coinbase, et cetera?
I would say we're not an exchange, so we don't list. We support trading on the ATS side. And as Chairman Gensler has said, the virtual currency exchanges are currently trading a lot of securities. So I would argue that there's a major crossover there.
Aaron, thank you very much for joining us this morning. That was Aaron Kaplan, Prometheum Inc. founder and co-CEO.